Good evening. How are you? Wherever you are, I greet all of you in Jesus' name. Yes, I'm today going to take you through an important topic, and that is financial reporting. If you look at the title for my YouTube, it is stated that it is a cash flow. So I'm going to teach a lot of financial content, and today we are going to start with financial reporting. Why is it important? And how do you go about? How do you prepare it? That is the basic. It's very important that we need to know. You could be the person working, earning salary. You could be the owner of the business, small business, sole proprietorship. You could be running a company business, or you could be at any level. With the finances, it cuts across. Even at the family level, you need to know this knowledge. You could be a doctor, you could be an army officer. Mention them. It's important that you need to know a bit of finances. So I'm going to talk about financial data. I'm going to talk about books of prime entry. I'm going to talk about the ledger accounts, the trial balance, financial statement, and those one will come bits by bit. But I still want to emphasize, like many businesses, doesn't reach 10 years, they would wave off or fail to exist. Why? It's because we fail to manage our finances well. Many are business people, but they don't have data, they don't record. Like take for instance, you have gone and purchased goods. Upon arriving and bringing goods to your shop, do you record? You don't record. What about sales? If you are selling, do you record? Sometimes you don't record. What about if you sell on credit? Do you record somewhere? Sometimes people record, or sometimes they do record, but it is incomplete. If your debtor pays money, do you have records of it? What about if you are also owing or you have taken goods from the suppliers? Do you record it somewhere? You see? So anything that is surrounding professional business or even your personal finances, it is important that you need to record. I'm talking about the data, financial data. You need to record, and those data have to be recorded in different times of prime books. And those books are very important because it will help you to refer to. It will help you for decision making. Now take for instance, if you are paying taxes, eh? You are paying taxes. On what basis are you paying taxes on? It will help you on those. So it's very important. It will help the managers in decision making. It will help the shareholders in decision making. Eh? It also keeps contacts. You get to know the contacts of the suppliers. You get the point? If you want to refer, you might to make a call. You want to make a call. Or data for your sales. The prices also changes. You see? You see? So it's very, very, it's also important. for the employees of the company, because those data in one way or another you will get to refer to them. And sometimes if it is a public company limited for public consumption, sometimes you go to the bank, you'll find that financial statement is displayed. You see, so all those are also very important. You see, so let's go and look at those books. So these are what sort of financial data. So when you don't record, you tend to forget. As time goes on, you tend to forget. Now take for instance 1 year, 2 years, 3 years. You can't recall all of them. You could have had a lot of transactions, a lot of dealings. So you'll find you're forgotten. So that's why it is very important to do what? To record. So the next one is, having recorded the financial data, where are you going to? Where are you going to enter them into? We call it the sources, records, and book of prime entry. Book of prime entry. So I'm just going to run over these books one by one. Why are they important? The business transactions are nearly always recorded on a document. Those documents are the source of the information in account. Such as document includes the following. You see, like quotation, sales order, purchase order, invoices, credit notes, debit note, good receipt notes. You see. So books of prime entry, the source documents are recorded in books of prime entry. But journals are used to record source document that is not contained within other books of prime entry. They record the following: the period for the adjustment, correction of errors, large or unusual transaction. So let's go and look at one of these books. Say sales day book. Sales day book is used for recording daily sales. Simply just like that. The sales day book is used to keep the list of all the invoices sent out to the creditors. Each day it is. Now, how do you now record it? How do you record it? So of course you know that with the account you have to enter everything by details. It's a book used to keep the list of invoices. So you will have to record the date. You have to record the invoice number. You have to record the name of the company. And you have to record maybe what's so-called the number, the reference number. We call it receivable ledger. Then you have to record the amount. It is a single entry. It is a single entry. So you need to what? You need to record those. That is called sales day book. Then the purchases day book. This is used to keep the record of invoices which the business receive for credit purchases. So when you go and buy from outside and you have not paid, you record them in purchases day book. You record them in a book called purchases day book. While sales day book is a book that you use for recording invoices for your sales that you expect to be paid. Let us understand this too very clearly. Sales day book you use for recording invoices that you are taking it outside. It's called outgoing invoices. Meanwhile, purchase day book is used for recording incoming invoices. Incoming invoices, it is your suppliers that are invoicing you. Outgoing invoices is getting out from you. You are the one invoicing your customers. Purchases day book is a book used for recording invoices that comes from your supplier. And as I said, it is also the same thing. You have to record the date, you have to record the supplier's number, the supplier's number, the supplier's name, you have to record the reference number, you have to record what? The amount. It is a single entry. So let us mark that. We are going to look at the third prime book. The third prime book is cash book. Cash receipts and payment are recorded in a cash book. Remember the sales day book, we have not talked about cash. We have talked about invoices going out, you are expecting a cash. Purchase day book, we talks about invoices which is coming in, you have to pay. Now cash books, we record receipts and payment. We record money that comes in from your sales. You get the point? And money which you pay record of your purchases day book. Remember, purchases day book are invoices that you need to pay. Meanwhile, sales day book are invoices which your suppliers have to pay you. So when your suppliers pays you, you clear from the sales day book. That one record on the debit side of the cash book. Cash books now have two sides. We have receipt that is on the debit side, used for receiving the money. Then the credit side is used for recording payments. Payment to your suppliers. Payment to your, let us get this one right. So you'll find cash book is divided into two. We have the debit side and we have the credit side. The debit side is a receipt, used for recording receipts. The credit side is used for recording payments. So payment to your suppliers or anybody else. The other one is used for recording money that you receive. So let sometimes we tend to divide cash book into two. We can tend to divide petty. You can initiate petty cash book. Petty means small. So petty cash books record smaller cash book transaction, but the concept remain the same. Say, take for instance, you can put $500 there as a petty cash book. You can put 1,000 depending on the size of your business. Say, take for instance, you don't want now to involve now major transaction you keep in a bigger cash book. And petty cash book works on interest basis, work by standard. Say if you put $2,000 there and you have used 1,200 and the period has elapsed, the period has come, that means you need to put again another 1,200 there, so that you keeps it at 2,000. We call it interest system. So we shall discuss that one later on. So these are the simple books which are very important that we need to practice them. We need to know. As I told you, without them, cash is very tricky. Business is very tricky. We need to have those information. Very important. Now the third one is ledger accounts and double entry. You can extract. It is very important for you to succeed. That is very important that you have to employ a cashier or an accountant or a finance officer, so that clear records is kept. Clear record of business transaction is kept. For you, you may not be there 100%, not every time and rest of it, but upon coming to the office and rest of to the business, is essential that you need to go through those books, because those books would help you to detail what has happened. And the recording have to be fair. They have to record truly what has happened. So the book should not be misrecording the data inside. It have to be perfect. So when you talk of the ledger, ledgers appears in T-shape. It have the debit side and it have the credit side. And this also depends on the types of account that you are handling. Like take for instance, you have the ledger book for cash book. you will have the ledger book for cash book, which we have just talked about. You have to know that cash book have debit double balances. And therefore, that means that money that comes in, you have to debit in the cash book. Money that gets out, you have to credit it out. And it is balanced in that way. And under no circumstances should cash book have negative balance. Unless maybe there's an overdraft and the rest of it. So if your accountant or finance officer present for you an overdraft or a negative cash balance, know that there is already something very fishy. You get the point? And these are also very important because you can just give a call. Please send for me your statement. Send for me the books of account. You read through and you call upon. You take your time. Let somebody, that finance person, teach you how it goes about. Otherwise, thank you so much. I wish to end here. I I wish you all the best. I shall be sharing a lot of content still, but this is just the beginning. As I said, I want to keep it very simple and very smart. This is, I'm not targeting those one already who know finances, those one who gone to school and rest of it. But I'm teaching somebody there who needs this knowledge. Somebody who need this knowledge. Though it is basic, it is a basic knowledge, but it's very important. Let us practice that. Even our own, those who are working, the salary earners, and you don't have the business, you need to record. Now, at the end of the month, you have received your salary. What are you going to do with that salary? What are you going to do with that salary? What you want to do with that salary, you clearly have to spell out. You have to write them down. A, B, C, D, E. Then you balance before even you start using the money. Because if you have not written them down, believe me or not, you can easily mess up with your money. And by the way, those one who want to save, the principle is, if you want to save, say you get $1,000 and you want to save, say 400, the principle is saving must come first. You have to save before spending. You have to put aside that 400, then you plan on the remaining 600. You see? So that is that. I wish you all the best, and remember to subscribe not to miss more content that are coming. And thanks all of you, those one who have subscribed, like the page. I wish you all the best from wherever you are, in US, in South Africa, in Dubai, in East Africa. I wish you all the best. Thank you so much. Not forgetting us guys who are in country here. Otherwise, all the best. Thank you.